Let's break down the stock market in the simplest way possible, because if you've ever felt like investing is too confusing to even start, you're not alone. This is your intro to stock market basics and how it all connects. It all starts with a share. A share is a single unit of ownership in a company. When you buy a stock, you're buying one or more shares, which makes you a part owner of the company. If the company does well, your shares become more valuable. If it doesn't, they can lose value. So, stocks equal small, partial ownership in the company plus potential growth. Next up is bonds. While stocks make you an owner, bonds make you a lender. When you buy a bond, you're lending money to a company or the government, and in return, they pay you back over time with interest. Bonds are usually less risky than stocks, but they also tend to grow more slowly. So, how do you invest without picking individual stocks or bonds? That's where a mutual fund comes in. A mutual fund is a collection or bundle of different investments like stocks and bonds, all managed by a professional. You buy into the fund and they do the investing for you. Then there's something called ETFs, or exchange traded funds. ETFs are similar to mutual funds in that they hold lots of different investments, but they trade on the stock market like individual stocks. That means you can buy and sell them anytime during the trading day, often with lower fees. Mutual funds can only be traded once a day. All of these, stocks, bonds, mutual funds, ETFs, are bought and sold on something called a stock exchange, like the NYSE or the NASDAQ. And no, you don't need to understand every detail or have a finance degree to get started. A simple investing app or brokerage account can get you going from your phone. Once you're looking at the numbers on a stock exchange, it can help to follow indexes, or large groups of stocks and investments bundled together to get an idea of how that sector is doing. Some examples of indexes are the S&P 500, which tracks the top 500 largest companies doing businesses on the stock exchange. You can't invest in an index itself, but you can invest in ETFs that follow specific indexes. The more you understand how all these pieces connect, the more confident you'll feel in your financial decisions. And with Groove, you're not doing it alone. We're here to help you learn at your pace, build strong habits, and feel good about growing your money. So, if the stock market felt confusing before, you're already one step ahead now. Check out Groove for even more detailed videos and articles on understanding stocks, bonds, mutual funds, and ETFs.